Assalamualaikum warahmatullahi wabarakatuh. My name is Nina Shakira binti Zakaria. This is FIN 546 Islamic Finance. We already know Islamic banking is a banking system that complies with Islamic law Sharia. The rule and the practice under Islamic banking are in accordance with the primary sources of Sharia law such as Quran, Sunnah, in the absence of such specific practice which does not state under the primary source, secondary source which developed by Muslim jurists such as Jina, Qiyas, Ijtihad will be used as reference. Islamic banking empowers on profit and loss sharing. They do not allow excessive earning that does not involve with the real hard work and productivity. The investment under Islamic finance institution involves with the real asset state of the financial asset. Islamic financial uh, Islamic Islamic financial institutions operate in the same society where conventional banks do not perform all the functions which are expected from the financial institution. IFI assists business world by providing all the services required to run the economy smoothly. However, the philosophy and the operation are different. Now we are moving to the difference between Islamic conventional money market and instrument money market. Many of the bank have issued the dual banking system where they offer the Islamic money market instrument and conventional money market instrument in one central place such as a bank. This will make the customer easy to reach or buy the instrument. However, there are few difference of the Islamic money market instrument and conventional money market instrument that society needs to know. Different of both Islamic and conventional money market instrument is the contract used in the instrument, uh, which is such as Murabaha, Wakalah, Kar al Hasan, all uh, permissible according to the Sharia principle where it does not incur any element that can market the instrument voidable such as Shigara, Maisir, Riba, because all the instruments have an underlying asset under Ijara, which is a lease contract. For example, Ijara, a lease contract whereby a party is given a right of use in return for a rental payment. The Ijara structure is usually used for the operation phase of project financing in conjunction with istina structure during the construction phase. Secondly is wakala, which is an agency contract where about the wakil act in agency capacity on behalf of the financer. Okay, for the conventional money market, which is we have what it mean first is the money market loan refer to the trading in a very short-term debt investment at the wholesale level. It involves large amount volume trade between institution and the trader. At the retail level, it include money market mutual fund bought by the individual investor and money market account opened by the bank customer. For example, is commercial paper, which is the commercial paper market is for buying and selling unsecured loan for corporation in need of short-term cash infusion. Only highly credit worth company practice, so the risk is very low. So secondly, we have the certificate of deposit, which is most certificate of deposit are not strictly a money market fund because they are sold with the term of up to 10 years, which is a long term. However, certificate deposit with term as short as 3 months under the below the 1 year are available as with money market account, bigger deposit and longer term yield, better interest rates. Now we are moving to the structure. Okay, Islamic and conventional financing may intentionally appear incompatible. The structure issue involved are not insurmountable. Finances is above Islamic finance institution and conventional bank have been rapidly developing technique to provide the method and tool required to create the investment opportunity for the Islamic. So the structure is we have a current account. They still have many. I only explain the current account where in Islamic money market. I mean, current market is based on card contract where they do not earn the deposit any income whether directly or indirectly. The deposit represent on the balance sheet loan by the depositor to the Islamic finance institution that is required to maintain a liquidity ratio of 100% for such account. If the funds are used by the Islamic finance institutions for the productivity purpose such as employment is at the bank risk any profit accrued to the bank fee are sometimes charged by the Islamic finance institution for the management of such the account. So there's no specific underlying mode in use in current account. The bank can use the fund for investment and other purpose regardless Sharia pro- prohibition. Fee of cost services are offered to the customer which tantamount to interest for the money market conventional. So now we are moving to operational for the finance Islamic and conventional. So as is we already know, the operation of Islamic banking are driven by the rule of Sharia, which is define the nature and character of the deposit mobilized and financing provided. The basic concept, which is Islamic prohibit the interest, which is riba, and permit the trade tijara. Hence, the basic concept, which is Islamic prohibit interest rate, which is riba and tijara, unlike the profit in conventional bank, which are derived largely from the interest bearing loan. In the principle of Islamic, it is business risk taking to the form the basic for profit, and it's not financial risk taking. The Al-Bayn principle, which is we comply in Islamic banking, uh, is manifest by an exchange of the money with an underlying asset, whereas a contract of the interest-bearing loan entail an exchange of the money for more money. Besides, risk sharing and the real sector connectivity are distinguish Islamic banking from conventional banking. In Islamic banking, all financial transactions must related to the real economy. With for the conventional, leasing commences the very in the as the very day on which the price is paid by the bank, whether the customer has taken the delivery or not. And also expensive inquire in the process of the purchase of the assets are paid by the customer. In conventional also, leasing do not difference between wear and tear or loss caused by the negligence of the customer, and customer is liable for the cost incurred due to the natural disaster. So penalty charge are taken from the customer on a late payment. They are taken as the income by the bank. I mean, okay. For the Islamic, rental or leasing or ijazah start after delivering of the assets, not from the day the price has been paid by the bank. Okay, bank in Islamic also bank is the owner of the assets. Therefore, it is liable to pay all the expenses incurred in the process of its purchase. The customer is responsibility only for the misuse and negligence, but not for the event beyond control. In auto, Ijaras is situation in the treat separately.